So, Lionel, this is some pushback against the idea that more customers is better, and Barclays really wants to extract more value from each of the existing customers that it does spend a lot of time and money on.
Exactly, and this is something that banks talk a lot about. They love to talk about how they are really taking control of their client list and really drawing a line through clients that don't make them enough money. Obviously, profits are in short supply at the investment banks, so is balance sheet, and so they want to cut costs. That's great. But the reality is that the clients that these banks often cut are the low-hanging fruit. And when they talk about trying to generate more revenue, squeeze more money out of the top clients, the best clients, there you realize they don't have that much power. As you get to the top, the real prestigious clients actually have more negotiating power with their banks. So you can see the tables turn somewhat. So take this with a pinch of salt, in my view.
All right, so it sounds great, but to do it in practice is actually fairly difficult. It's also not an original idea because Deutsche Bank, Morgan Stanley have come up with some version of this as well. Won't they all be chasing after the same customers?
That's exactly it. I mean, every bank wants to be getting more revenue from the most active hedge funds, the biggest global pools of capital, the really big asset managers. But, again, these big asset managers are the ones that want the most from their bank, the most global full-service investment bank offering. So if you're a bank that's cutting certain asset classes, certain businesses, it's really hard to keep those clients on board. So it just becomes harder for banks to kind of trim around the edges when it comes to these clients. So it's actually quite tricky.
You said that the banks don't have as much leverage as they might think. How much leverage does Barclays specifically has, because it's really trimmed down its global ambitions and is now more of a UK-based banking operation than a global investment bank?
Absolutely, and geography is important, right? I mean, if you're pulling out of Asia, right, then you're not able to access those kind of global trades that do incorporate Asia. So I'm sure that you do see some impact from changing the strategy and changing geographies as Barclays has done. On the other hand, Barclays has really stuck with its investment bank. It really wants to be a transatlantic consumer and corporate and investment bank. And again, if the markets keep going positively as they have done, then that could be a nice cushion, a nice uplift for the bank that has nothing to do with cutting client lists, but everything to do with confidence in the market and from clients in general.
And I'm glad you bring that up, because my next question is, why now? Why is Barclays going about this now, 8 years after the financial crisis, when we've got a sea change in macro conditions, this reflationary trade gaining momentum, the Fed seeking normalization, presumably a return of volatility as well?
I think it's a reflection more of the kind of way that banks have to walk the walk as well as talk the talk. I mean, there's been a lot of talk over the past 5 years about banks' need to really cut costs and clamp down on their businesses, but we haven't seen that much action. So I think it's kind of a good thing to still hear this kind of noise, even with markets getting better. You really can't be seen to be just counting on a cyclical upturn, given the pressures on costs. So I think it's an encouraging sound, but as you say, it's really down to the markets, down to confidence in terms of what we see in terms of revenue next year.
Is this a kind of strategy, Lionel, that resonates with investors? Do they reward this kind of approach?
I think so, but I think if you look at the numbers and the track record, there is a lot for investors to be disappointed about. I think it's since Trump's election, we've seen European bank stocks and investment banks rally heavily. So I think they're willing to get the benefit of the doubt for now. But I think that if we don't see the real delivery on revenue but also cost, then I think there'll be a lot more disappointment to come.